Let's talk about Blue Star, another stock that we are focusing on today because of the earnings. It turned out to be a weak quarter for Blue Star. The stock is down 0.39%. The company posted a loss of about 5.8 crores in this quarter versus a profit of 9 crore rupees. Total income, meanwhile, was higher by 11%. We have the management now joining us to help us understand as to what happened in the quarter. Mr. Satish Jamdar, MD at Blue Star Limited. Thank you very much, sir, for being with us here on NDTV Profit. Good to have you on the show today. What went wrong in the second quarter? Why, why a loss? Is it because of that voluntary retirement scheme?
Yeah, morning, Anisha. No, I think I need to clarify to everyone, first of all. I got an echo. You'll have to get rid of my echo, please. Yeah. So, last year we had the entire three segments reported in Blue Star. And if you remember, during the year, actually end of last year, we moved our professional electronics and industrial system, which are segment 3, into 100% subsidiary. Remember that news? It was a strategic decision we took to free that business and give it its own independent flavor so they can expand in their own way and give them that little freedom to do that. That's what we did. So this year, and that in the second quarter especially, there's very little of that business added up. So then it's not a like-to-like comparison. So we said that in the notes, but obviously because audited numbers are these, they are declared like this. So there is actually not a loss in the second quarter. And in fact, if I take the combined business of last year and this year as a comparative number, we're actually slightly better than last year. But I will add that our first quarter was much better than the previous first quarter. In the second quarter, we sort of went little below last year's performance, and therefore at the end of H1, it was slightly better but not as good as quarter one. So that is a fact, but it's not a loss, nor is there any expectation of anything going wrong. I think what happened though in quarter two specifically was in the summer season this year, the cooling products, that is especially the window and room ACs, the market growth was much below expectation for all players. Everyone expected a much better summer performance, but if you remember, there were unseasonal rains beginning of the year, and there were rains which lasted for a long time. The summer got delayed, so everyone's summer business did not pick up like usually it does, and most companies landed up with the excess stock end of the summer quarter. And so this particular quarter, which is the July, August, September, which is usually a lean quarter for retail sale of room ACs, everyone tried to discount and liquidate those stocks, and we also could not raise our prices in spite of the cost increase due to the dollar devaluation, rupee devaluation, and so the margins took a bit of a hit. Otherwise, honestly, there's nothing to be concerned about. We expect things to pick up again. In fact, we saw September, October as the season has picked up. The summer has picked up again. Very unusual summer we're seeing in parts of the country. So sales have picked up again, and we are actually seeing a bit of a rebound in the room AC business now. So I think we should catch up and should be able to post a better second half in any case.
Any targets that you can give us, as in terms of margins and your growth? I mean, what is the range that we can really look forward to as far as the second half of the year is concerned, and what particular segment is really going to drive growth going forward in the second half?
So our products business, that is cooling products, continues to grow. As I said, maybe in the first half the growth was a little less than it was for the last 2 years. In spite of that, we were definitely well above the market average. I think the market grew perhaps only 5%. We still grown about 15 compared to about 25-30 in the last 2 years. So there's, to that extent, we were a little slower, but still better than the market. So we gained some more market share this quarter, this half year. The electromechanical projects, our MEP business, we were just, by the way, the top MEP Contract of the Year very recently. It indicates all the kind of good work we've been doing in setting things right and making it a very well-run organization that at sites, project management, etc. And our order booking there actually been very steady and good for the last 4 or 5 months, which is I'm seeing for the first time after about 2 years a continuous good order inflow with much better margins, paying us back for all that we did right for the last 2-3 years in holding back, not getting into top line but looking at cash flow and bottom line growth in the electromechanical projects. So that's beginning to show signs of full profitability now in the second half, and we see billing hopefully will pick up in the second half there too. I think our service business continues to do well. Our segment 3, which is not sitting in Blue Star now but still 100% subsidiary shown in the consolidated results, is also looking good. I think generally the 50 BPS reduction in rate cut should help sentiment. I think the general atmosphere seems to be slightly better than the first half. I think we will see a better second half.
Right, Mr. Jamdar, you said that in the EMP business there were some billing issues that also affected the profitability of the EMP business. What was this billing issue in the major project that you mentioned in your release? Has this been resolved?
Well, billing in the set, yes. No, the billing part is essentially projects that need to move at the right speed that we wish it to move. So the cash flow and other things which are related to what the customer's project movement is what affects us. We have started seeing now a pickup in the project movement too. Of course, I would still say that I won't say it's the investment climate is fully in, but one is seeing beginning of old projects being revived, the speed of execution picking up, and that will automatically increase the billing cycle for us. So once the speed of execution picks up on those sites where customers are actually now planning to go ahead with their projects in a faster way, that's what the billing cycle issue I'm talking about. Nothing to do with what we can do. We are all ready and waiting to execute actually. On the product side, as I said, the better summer and slightly better sentiment due to cash flow, I think will hopefully revive the second half better than the first half. Right. So I am seeing good growth prospects. In fact, we are building for a much better second half. We are actually building even for a better next year. Right. So all that work is going on. You may know that we have closed on 2 of our very old plants and created capacity in the new plants, looking at investment for building new plants now in the next 2 years. So all that work has also been going on.
Right. Mr. Jamdar, I wanted to understand what was the volume growth that you saw in the second quarter. You said that, you were not able to take price hikes, but did you have to do a lot of discounting? Because I want to understand what kind of volume growth are you looking at? Because for companies like yours, there in the past so far have been only price increases and not many price cuts.
Well, the price discounting is all because the industry has excess stock and they're trying to liquidate it. It's part of what happens to everyone. So it's not as if we are different. In fact, I think we are better off than most others. What I see better is the low input costs. The Chinese prices are down. I think they are devalued. So they're more into the export mode. They want to ensure that their products sales are exported into the whole world, of course, into India too. So we are seeing prices being reduced there. We have renegotiated some of the component and product prices. We looked at, of course, in spite of the dollar rate being a little higher, so there will be some correction due to that. But overall, in spite of that, there will be a input cost reduction, which will mean that the margins would be slightly better. As I said, the seasonal, there's a seasonal, the festival season that people look at is begun. we've seen some better offtake. They're starting in Kerala with the Onam festival. Now we're seeing Dussehra, Diwali pick up. And so it'll carry on, I think. And while the weather is hot, in fact, it takes, the sales are better during those times. And we're seeing that happening. So I would expect, if our growth was roughly about 12% in the first half, I'm expecting with a slight improvement, maybe something like 15 to 18% growth in the second half. That's my calculation.
All right. Thank you so much, Mr. Jamdar, for speaking with us at NDTV Profit, giving us more details of the earnings of Blue Star Limited in the second quarter. So, Mr. Jamdar,
Yes,
very hopeful that the second half will be better. There's a pickup in the festive demand, and there will be growth about 15 to 18% that Blue Star will manage in the second half of this year. We'll slip into a break at this point in time. We'll come back with more market updates. Stay with us.